We've got an EPS beat. EPS coming in at 16 cents. The estimates were calling for 14 cents. So they did post an EPS beat here. They're also increasing their revenue guidance here as well, all coming in at once here. Oh, this is going to be a good report for them. Let's see here. Operating income for fiscal year, they've bumped this way up, $1.91 billion to $1.92 billion. It was estimated to be 1.7. They're reporting that their U.S. commercial revenue growth of a 93% year over year. There was that number we were just talking about, that commercial revenue growth. What were we looking for? Street was expecting 38%. They grew 93% year over year. Revenue growth on the whole, 48% year over year. They're guiding Q3 revenue to be up 50% year over year, and fiscal year 2025 revenue to grow 45% year over year. Commercial revenue for the full year to grow 85% year over year. They absolutely crushed expectations on those numbers. Alex, as you are just getting a look at them, what are your takeaways here? The street likes it. It's in the green for now.
There's a lot of places you can go here, but we talked about that U.S. commercial revenue being a really heavily scrutinized piece. I think they definitely exceeded the expectation. We'll see if it's enough. The stock's kind of given back some of that initial reaction, but this is a pretty hefty beat from where the street was for the full year. Street was at $1.16 billion for U.S. commercial revenue for the full 2025, and it looks like they've guided for 1.3. So that's over 10% above where the street was at. I mean, these are pretty nice beats. You said that 90-some percent coming into this. I think that particular segment was expected to grow around 70%. So it's beats across the board, but it's really a strong, pretty excessive beat in probably the most important segment.
Absolutely, and Kevin, as you're getting these numbers, first let's focus just on the second quarter results. Revenue coming in at $1 billion, up 48% year over year, so 10% better than expected. Operating profit up, well above the estimates. EPS coming in above estimates. Is this enough?
Yeah, I think it is. I mean, if you're looking at the fundamental nature of this company, they've been able to really outperform the street's expectations. Is it enough to be able to try to move this stock above the expected move to the upside or downside? That is the big question. So many individuals are actually trading this name on an options basis, so there's a lot of premium there. So you'd like to keep it kind of, if you're a dealer, if you're a market maker, you'd like to keep it within that expected range and let that premium kind of roll off here. So we probably will see a fair amount of volatility in the after-hours session. Let's get to the conference call. Let's hear about their outlook moving forward, not only just looking at the guidance, but also what they are seeing on the ground level there when it comes to demand. And we kind of talked about them closing deals at a record-setting pace as well. They closed $2.27 billion in total contract value for the quarter. That's 40% growth on a year-over-year basis, and $843 million in U.S. commercial total contract volume. That's up 222% on a year-over-year basis. They continue to exceed the street's expectations when it comes to that mark, and that's really going to drive growth moving forward here. Biggest risk that you have as a shareholder, especially for a company that has this much of a run-up, Marley, is maybe they take advantage of that and offer shares out there to raise capital if they need to raise capital. This would be the time to do so. I think that's the biggest risk that you have, and usually we do see that type of activity. I'm not saying that's happening right now, but that's one of the bigger risks that you have when you do see some buyers continuing to step in. Some companies are going to say, okay, let's actually capitalize on this and try to raise some money by doing an offering. That could be probably one of your bigger risks over the next couple of months if you had one.
Yes, certainly could be, and I want to talk about a couple numbers we haven't gotten to yet as I'm pouring over just for the current quarter, and then we'll talk guidance. Their free cash flow came in so far, about $568.8 million versus $148.7 last year, and their operating margin up to 46% versus 37% year over year. Estimates calling for 42.8%. Just on the quarter itself, Alex, they just blew it out of the water. But then as we move into the forecast for this current quarter and the year forecast, just numbers that are so beyond, I think, what anybody expected.
Well, and I think this, to Kevin's point, and one, you just talked about free cash flow. This was 50-some percent above the estimate where the street was for that particular metric. So that risk of, a Palantir equity offering won't go away given the huge run-up, but free cash flow is looking nice. They're obviously doing things at a high margin way. They don't need the cash really necessarily if they're doing so at the pace they're doing. So maybe that risk comes down just a little bit.
And as far as what we're looking for their year forecast and for their current quarter guidance here, their revenue coming in between 1.08 billion and 1.09 billion for the quarter. We're currently in the third quarter, well above the 985 million they were looking for. Operating profit coming in at a much higher range as well. And then that full year forecast, as far as what we're not seeing, what we have to wait for on the call, Kevin, to you. What do you think the questions are going to be for the company since they did post such impressive numbers?
Yeah, is it sustainable? I think that's going to be one. The variability when you have the U.S. government contracts are also going to kind of create a little bit of volatility when it comes to these numbers. So I think the street is now getting a little bit more comfortable with just looking at the commercial sales as a whole. I think you probably will get a question from an analyst. Hopefully, are you kind of conservative in your guidance? If you kind of look at the growth rates that this company has been able to print over the last couple of quarters and what they're guiding to right now, just kind of looking at it top level, you would say, yeah, they probably just undercut themselves, making a conservative guide to make sure that they can beat. And I would suspect that maybe an analyst may ask, hey, you're printing, double digits, triple digits in some respects on a year-over-year basis when it comes to U.S. commercial. Do you think you can get a little bit more from that? And that might be something that they're trying to set themselves up for. And I think the leadership staff has done a phenomenal job here with this company. If they can continue to bring on new customers in the fashion that they are doing it, especially those that are generating over $100 million in contract value, this company is going to continue to probably get the optimism that the street loves for the future. And from a government standpoint, I mean, we're increasing AI capabilities from a government standpoint and surveillance, and some people don't like that. But at the end of the day, this is their business, and they've been able to excel and far exceed the street's expectations. So phenomenal quarter. Looking forward to the conference call here if they have any other additional insights.
And Alex, final thoughts from you. Right now up about 4.5% right now.
One of the things that makes a company's leader really, really effective is how they can frame things. But it makes it way easier to frame things in a positive light when you actually have a good story to tell. We've seen it from Jensen Huang. We're going to probably see it from Dr. Karp as well. And this is a company that is executing at a very high level. And it's their time to, show that off a little bit and brag a little bit. I wouldn't be surprised if there's a very confident Palantir executive team on the conference call.
Yeah, I certainly think a very strong quarter for them. I think people will be happy with this. Questions will come up, but thank you both for being here to cover this with us. Also, Hims and Hers just released their earnings as well. They did post a beat on EPS, came in at 17 cents versus the 15 cents that was estimated, but they did miss on revenue, came in at 544.8 million. Estimates called for 552, and shares are down aftermarket about 7% on that news. But to wrap up Palantir, they posted a really impressive beat, 16 cents on EPS. Revenue came in at $1 billion with that very important U.S. commercial revenue growth, 93% year over year. Full revenue growth up 48% year over year. So impressive numbers out of Palantir. Thanks again to Alex Coffey and Kevin Green for breaking down those earnings with us.